Guess who's back? Ladies and gentlemen, welcome to the world-famous Compound channel on YouTube or Apple or Spotify, wherever you're getting me. It's so nice to be with you. I have my co-host of What Are Your Thoughts here with me today. His name is Michael Batnick. Michael, say hello to the folks.
Hello to the folks. What's happening? How's everybody doing? Good? Same.
So for relatively newer viewers and or listeners, I don't know if you guys realize how long we've been at it. We've been doing this since 2019, 6 years. Does that sound right to you? This particular show. What are your thoughts?
Wow.
I mean, I know Animal
That's- I feel
Spirits
like
is a little bit longer. It's a little bit longer running, right? That's 2017.
But 6 years is 6 years, man.
It's 6 years. All right, and better than ever. Better than ever.
So.
I don't know if you've seen the reviews and the video views.
I feel like I'm at the peak of my powers, personally. I don't see the reviews, but I feel
too.
good.
All right, let's thank our sponsor real quick and then get right down to it because it's earnings season and there's a ton of stuff here.
A lot to get to today. So today's show is brought to you by our sponsors at Betterment Advisor Solutions. Imagining a future is the first step.
Investing in that future with Betterment Advisor Solutions is the next. Whether you're launching your own practice, looking to streamline client onboarding, or just searching for efficient ways to scale your firm, Betterment Advisor Solutions is here to help.
They automate to make tax optimization simpler, and they provide support to make administrative tasks easier.
At Betterment Advisor Solutions, they are building innovative technology for anyone who's ever said, I think I can do better. So grow your RIA your way with Betterment Advisor Solutions.
Learn more at betterment.com/advisors. Investing involves risk, performance, not guaranteed. Josh, let's get to the show.
All right. So first things first, you got that Siegelman Stables hat at the Knicks game. I think they sold them out. I don't think there's any left for game 2.
Okay.
They had like
Game
1,000.
It's game 5, son. Oh, you mean there were no?
No, I'm saying
I got you.
I don't think they're gonna have them there tonight because I didn't get one. I was gonna ask you to get me one, but I think they're sold out. But it looks good on you. I like it.
Thank you.
Let me show off a really quick brand new piece of merch. Whenever we do something new, we tend to show it off here first and give our live viewers the first crack at it. These are limited edition. We're not going to have a ton of them. This is the official Markets in Turmoil t-shirt. How could you trade without this shirt? Like, I don't even know. What do you, oh, it comes in 3 colors. That first color was navy. You know what this color's called, Mike?
This is royal blue.
Cobalt.
Okay.
Royal blue is for pikers.
Okay.
And this is purple.
I like it. I like them all.
Guys, these are not available anywhere else other than the Compound. Nicole just tweeted the link. We'll have the link in the description on all the platforms. Get them while you can. The official Markets in Turmoil shirt is the most legit way to represent the Compound while you are navigating these markets. All right, let's start with Ray Dalio. It might surprise you, but he is somewhat pessimistic and concerned about the situation that we find ourselves in. And not to be overly blasé, but the stock market is coming off 5 straight rallies in a row, and he's still pushing this through. Like, he's still going through with this line of thinking, which is that it's too late. The changes that were probably going to happen anyway, and Trump has just accelerated, are you can't recover. So I just want to read you the opening 2 sentences and then get your reaction to the piece. And he posted this on X.com and I'm assuming elsewhere. This is Ray, one of the greatest hedge fund managers of all time. Okay, we'll get that stipulated. Some people believe that the tariff disruptions will settle down as more negotiations happen and greater thought is given to how to structure them to work in a sensible way. However, I am now hearing from a large and growing number of people who are having to deal with these issues that it's already too late. And then he goes on to say, whatever happens with tariffs, these problems won't go away, and that radically reduced interdependencies with the U.S. is a reality that has to be planned for. Ray's got deep ties and roots in China. Mm-hmm. He's been managing money for very powerful and wealthy Chinese people for decades. So I think that's probably where that's coming from. What do you think?
Yeah. So I don't know Ray Dalio personally, but he's been on the beat that the U.S. is at the 1937 yard line, that the debts that we've been creating are unsustainable, and he has ostensibly been looking for that unsustainability to not be sustained and to go a different direction.
He's been looking. He's been in search of the trigger, and now he thinks he's found it.
Yeah, so maybe he's right.
Yeah.
All right. So even though he's been saying this since at least 2017 that we've been on the precipice of something not great, I don't want to then discount what he has to say because I don't necessarily disagree with him. He obviously knows a lot more important people in China than we do. Is he being hyperbolic? I don't know, but I do agree. Bottom line, I agree that a lot of the damage that has been created over the past 28 days or whatever it is since Liberation Day, that can't just be undone with a tweet.
People can't forget.
That too.
I think so. There are a lot of people like Weisenthal and Tracy are mocking this idea that like in Asian culture it's so important to save face, and they like tweet it like mockingly, like, "Oh, are they saving face?" I don't even think it's about saving face. I think it's just like a wake up call. The Europeans and the Asians just looking at the situation and saying like, "Oh, we can't rely on this shit. These people are crazy. Like, look how they speak now. They're not doing this behind closed doors. They're like tweeting this stuff. Like we
Counterpoint.
God.
We are the consumer to the world.
Yeah, no, stipulated. But also, there's an implicit deal there. We're the consumer of the world, and the reason why is because the world has agreed they'll keep buying our debt. They will finance our consumption of the things they make. That was the deal.
Yeah, but wait, but you said
There's
it last
a reciprocity there.
But you said it last week. It's not as if they're financing our debt for nothing. We're buying their goods and they're turning their dollars into reserves.
Yes, it's a system.
Yeah.
It's a system. It works.
So the question is...
It just doesn't work for every single person.
The question is, was April 2025 a watershed moment in the history of international trade and monetary policy? I don't know. Maybe. Like, for real, maybe.
All right. If I had to guess, like, what's the better bet? We look back on this in 3 years and say, everything changed? Or we look back on this 3 years and say, remember that? That was weird. LOL. Anyway.
I'd say the latter.
The latter is more likely or less likely?
More likely, in my opinion.
That we look back on this and it didn't matter?
Yeah.
Okay. I hope you're right. I'm not sure how I feel, honestly.
No, I don't know what confidence I have on that. It's not like I'm not dismissing the fears. I would say, I don't know, like, am I 65% confident?
Okay. I am confident that this is not a rug pull and that if Ray ends up being right, it's not an all at once thing. It's gradual and probably imperceptible to most of us because we're not dealing in international trade. But it's just like this kind of, and Rebecca Patterson told us something similar. Like it's not like this earthquake that happens. She called it more like a drought, where the capital just like gradually there's less and less and less of it. Again, we don't have the answer like what's the alternative to the US dollar, what's the alternative to treasuries. There doesn't have to be one single replacement. It can just be a market share issue where we go from 30% to 20% and it happens over 20 years. And maybe we don't care, or maybe it's really meaningful and we look back and say, I can't believe we blew it. We had the ultimate situation. But that's the way that smart people are talking about it. Ken Rogoff told me that yesterday.
It's the right question to be asking.
This is Ray. Number one, we are on the brink of the monetary order, the domestic, political, and the international world orders breaking down due to unsustainable bad fundamentals that can be easily seen and measured. 2, the progression of events leading to these increasing disorders is similar to those that have progressed many times throughout history. So this one looks like a contemporary version of the old story. 3,
hold on. Just on the 2. He's dying to see this movie again. Not that he wants the world to burn. I'm not accusing him of that. But he's been saying, I've seen this movie before.
He's been prophesying it for long enough that at this point he's now rooting for it. I would agree. Even if he doesn't want to, I think it becomes subconscious. How many times can you go to Switzerland and sit there outside on that CNBC set and say the same thing before you actually want to see it come to fruition?
So if he's right, this like begoats him forever.
Yeah,
because he could say, I've been warning about this situation for a decade and nobody listened to me. Nobody took me seriously.
Okay, so it's if he's right, This undoes like 7 decades of precedent. So like we basically had this agreement in the Bretton Woods thing was just kind of this agreement that everybody said, all right, we'll go along with this because clearly the United States is the last superpower and the most reliable superpower that we're all allied with. And this is just going to be the way it is. And the dollar is going to have this centricity, almost like the sun is to the solar system. And it was okay. Like it did its job. It didn't work for everyone necessarily, but like free trade overall has been good for society.
It's been miraculously good for the globe.
Yes, and it's pulled a lot of people out of poverty, and it's led to tons of innovation that has made life longer, life better, more tolerable. Yes, of course, there are winners and losers, but we have to like look at these things on balance. Then in 71, you're fighting inflation, you're fighting in Vietnam, you're losing both. Nixon pulls us off the gold standard. The rest of the world's like, wait, what the fuck do you mean? What is the dollar backed by? And basically we said, it's like, don't worry about it.
Us.
Like, yeah, you got to live with that. It's us. We got this. And everyone said, okay. And that's 50 years.
Yeah.
That's the last 50 years. That's the history. Yeah. So now, from Ray's perspective, that's what's being threatened and probably being undone. Maybe now it's bipolar. It's the renminbi half of the globe and the dollar half of the globe. I don't know. Maybe you see some countries. Maybe you see the Latin Americans using more euros. Maybe yuan.
I doubt that.
I don't know. You doubt that Brazil, which trades in huge abundance with China, would not want to have more yuan reserves?
I mean, I was talking about the euro specifically. No offense.
Well, no offense taken, but I don't know that anyone can really know, because we know that gold is being stockpiled by every sovereign and central bank around the world. No denial of that. So we know that there are people that do want an alternative to a greater degree than they did even as recently as 5 years ago. So that part we know for sure. We don't know anything else. One of the big questions has been, will foreigners sell all of their U.S. assets? Again, that fear is probably overblown, that it's going to be some earthquake of people dumping their own holdings, because they're going to knock down their valuations if that's really the way they want to behave. So it'll probably be more of a trickle. Let's put these charts up. This is a Deutsche Bank chart shared by Tracy Alloway. We're not zoomed in on, but what's going on in that top left pane, that's inflows into foreign domiciled ETFs that invest in U.S. bonds. So that's a 1 month rolling sum priced in billions of dollars. So it's gone negative, but it's like negative $2 billion on a 1 month rolling basis. It's not this avalanche of money out of treasuries, at least on the part of foreigners holding ETFs. Am I explaining that right, Michael?
Yes.
Okay. In the right side, this is inflows into foreign ETFs for U.S. equities. Again, it's barely negative. So I think the thing to say is that, no, it's not like massive outflows out of U.S. stocks and bonds on the part of foreign investors, at least not by looking at ETFs, but it's like a buyer's strike. Do you agree with that? It's just like they're not dumping, but they're not buying at the same rate that they were up until now.
Yeah, and I would also say if you zoom out and you look at total holdings, it is so far up and to the right, and this is a dip. So that's important too.
This is right. This is not a complete trend change, what we're seeing so far. All right, we're going to get to earnings in a second. I want to do this political stuff really quickly in a non-political way. Trump just celebrated 100 days in office. Unless you've been living under a rock, the media has been gleefully reporting that it is the worst first quarter in the stock market for any U.S. president back to Nixon during a really horrible era for the U.S. economy. And I don't think things are as bad now as they were during Nixon's term. Rick Newman did a bunch of stuff at Yahoo Finance. He's got a great column. I'm just showing the charts here because I think that's really all we need to tell the story. The red line is Trump term 2. That's stock market performance at the 100-day mark. As you can see, he's behind Biden, Obama 2. Trump 1 was the third best on here. Obama term 1 was the fourth best. Both Clintons are back-to-back, then George W. Bush, then George W. Bush. So Trump term 2 is the worst in modern history. But again, it's 100 days. It's not going to define his entire presidency. Next chart.
I hope not.
Look at this. What do you think about this? Consumer sentiment, the worst out of every president. And just the rate of dissent is pretty alarming, yeah?
Yeah.
This is 50%. Consumer sentiment are these percentages or 50 points? How do they quote University of Michigan consumer sentiment?
Like Dow points.
It's like 1 to 100. No, it can't be 1 to. I don't know. It's horrible. Next chart. This gets a little bit more specific. What people are unhappy with. So the Trump economy at 100 days, jobs, manufacturing jobs, income, and inflation. And when you look at it this way, it's kind of middle of the road, right? Like relative to the other presidents?
Yeah, nothing really monstrously stands out here.
So it's interesting. Like on the actual data itself, nothing bad has really happened. And again, it's only been 100 days. So like all of that stuff is really stock prices and sentiment. All right, last thing. This is the approval rating at the 100-day mark for Trump term 2. The only worst approval rating we ever saw was Trump term 1. I don't think this is like anything other than politics. Like Obama in term 1 had the highest 100-day rating. People need to remember that's coming out of the financial crisis.
Right.
Like it could not have, like things could not have been worse.
Yeah.
And then Obama's inaugurated in January of 2009. March 2009, the stock market starts to rally furiously. And I don't think the whole thing is about stock market, but that definitely helped.
It's
anyway,
all part of the same. It's all part of the same thing. Let's move on.
What are your
to
thoughts
earnings.
on Trump's 100th day? Has it been everything that you hoped for?
I love it. Can't wait for the next 100.
Can you remember an about face this stark from what people's expectations were to the reality of the first 3 months? It's pretty jarring, right?
No, it's wild. Yeah. All right, let's do some quarter stuff.
Okay.
So
Take it away.
we are in the heart of earnings season, and it's mixed, as it always is. But let's throw up this first chart from ChartGoat. We're looking at 9.7% year-over-year earnings growth for the S&P 500, which has been revised higher by 3%, not nothing.
How?
Since the start of earnings season.
I'm not even joking. I'm not even joking.
I'll tell you.
Okay.
I'll tell you. So number 1, healthcare, up 37%. Communication services, number 2. Energy and materials and staples are in last. And let's get to some specifics, shall we, Josh?
Wait, can you stay on here?
Sure.
We're saying that healthcare grew, the sector grew earnings by 37% year over year.
It's a mix.
What the hell did we cure?
Both actuals and estimates.
I'm still a wreck. How did we do that? Not rhetorical. What?
No,
where
my
is that growth
silence.
coming
My
from?
silence. I can't answer. I don't know. I don't follow the healthcare sector that closely.
All right.
In fact, let me restate that.
Communication services.
I don't follow
I understand.
healthcare.
Okay.
All right, let's get into it. All
right.
So this is from Google's earnings call, which was last Thursday. YouTube Music and Premium reached over 125 million subscribers. That puts YouTube at a $62 billion run rate, about 1.5 times the size of Netflix. That's from App Economy.
Yeah.
That's monster. Look at this
Hold
chart.
on.
US TV time market share. YouTube versus Netflix. Netflix has been stagnant, and YouTube keeps eating it. Just keeps going higher.
Okay. So here's my hot take on this. I think the customer of YouTube TV, which I am one, is also almost a guaranteed Netflix subscriber. I don't think there's anyone that's paying Alphabet, paying YouTube $84 a month for YouTube TV, which I currently am, that also isn't giving Netflix their $20. I think that's almost universal. And it's a replacement of cable. I'm not saving any money. I ripped out all those Verizon Fios boxes 2 months ago, and I'm really glad that I did, but my bill is the same. I'm just paying. I'm paying YouTube for basic TV, and I get like a lot of sports, and I get all the news channels, the cable channels, and I get all the broadcast channels. Right? Then I'm paying Netflix. Then I'm paying Max, and I just think like all we really did was take the same dollar amount that was going to Comcast and FiOS and just hand it to Google. I mean, it's great for Google because now they have broadband customers that are just getting Wi-Fi from them. And then a lot of those people are probably also buying TV through them. And they're not really competing with Netflix. It's like they're complementary services.
Yeah, I would agree. So last week or 2 weeks ago, I was saying I'm really looking forward to Google's earnings reports, specifically to see what happens with search. Like, is the ChatGPT-ification of the internet going to show up in Google's earnings? And the answer is no, not yet. In fact, not even a little. So YouTube ads, I'll get to the search in a sec. YouTube ads went from 8 billion a year ago up to 9 billion, give or take. Pretty remarkable. When you look at Google's advertising, 61.6 billion up to just under 67 billion. Pretty amazing. They saw double-digit income, double-digit gains.
That, 61.5 to 66.8 percentage-wise. What is that, 7 or 8% growth?
10% or so. 10% or so.
It's 10 full?
Pretty amazing.
Okay.
And look down, look at the operating income. From 25.4 billion up to 30.6 billion. Pretty amazing. Now
they're executing.
They're executing. The stock still trades like shit. I am a weak hands owner of it.
I'm out.
Yeah, I know. It's not acting great. It's cheap, maybe for a reason.
It rallied 5%.
And it's given back most of it. So
it always does that. It's one of the cheapest stocks in the NASDAQ 100.
Yeah, if it rolls, I'm probably gonna bail, to be honest. So we'll see.
All right, I think it's like they're executing. They're doing everything they can do. It's a great company. It's just a great company going to war.
Yeah, the ChatGPT, the overhang is not going away. Now, I will say the AI overview, it's working, dude. Like, the numbers are working, the product is working. I'm using it more. Like, it's working. They're competing.
What AI overview?
So
the Gemini thing at the top.
Yeah,
of the
when you
search
Google
results?
something. So Gemini is like the ChatGPT competitor, but when you Google something, there's an AI overview which pops up right, and it's pretty good. So we'll see.
So when you put that same query or talk into your ChatGPT app, it's no overview. They just give you the answer.
Well, it's the same. It's the same idea. Like functionally, it's very similar.
Right.
Let's talk about Starbucks.
Google search never had to worry about that. Google AI does. They have to
Yes.
worry about that. There's 10 other versions.
For sure.
So
Starbucks, another stock that I own, it was a real piece of shit quarter. And
expected though.
Not
Nobody was
unexpected.
fired up for this quarter.
No, you're right. The turnaround story, the stock is down. Oh, all right, now it's falling. It makes sense. It was at first blush, it was like not really reacting negatively, and I'm like, why not? It was pretty crappy. So the stock is down 4.5% in the after hours.
Yeah. All right. So just to give people a little bit of context on Starbucks. So last summer, they pulled an absolute baller move. They went out and got literally the best CEO in the quick service restaurant space. They got Brian Niccol from Chipotle, and the stock just absolutely launched. It went from
78. It went from 78 to $1.20 almost.
Yeah, 78. I have 115 as the high. Maybe that's closing high.
Whatever.
As recently as March of this year. So for like 9 months, that stock went on an absolute tear. They've reported a couple of quarters. None of them have been good. Every time it's like, give Brian Niccol time. He's going to figure it out. I haven't really noticed much change. I'm in Starbucks 7 days a week. They're writing my name with a Sharpie on the cup. I could do without that. That feels like it slows shit down. I understand the mentality. It's like we're going to get our workers engaged again in the customer experience. Knock it off with the Sharpie. Nobody gives a shit.
They're doing, but it's China. China, they're doing way better. I think comp store sales were flat maybe even up a little bit, which was a disaster.
China is the big overhang on that stock. It's not how long it takes them to make a coffee. It's China.
No, but I agree, and the numbers out of China were not horrific.
Yeah.
So throw this up from consensus media. It's just disgusting. It's a miss everywhere. Like yes, expectations are not high, but they missed everything. So check this out, Josh. This isn't from the Quartr app. Speaking of like AI and LLMs and all that sort of stuff. So given that Starbucks reported an hour before we started, I said, "Tell me how the quarter went," and it did. It told me that total net revenues decreased. It told me that a decline in comp store sales, driven by a decrease in both average ticket and transaction volume. They cited challenging macroeconomic conditions, but then I said, "Tell me more about the most important parts." So it did. Comp store sales. Global comp store sales decreased by 4%, 6% decline in North America, and a 2% decline internationally. And what's really amazing, and forgive me for plugging a company that we invested, but it's just so phenomenal, is that it gives you like bullets. So it extracts it from the data, from the earnings report, and then you hover over it, and it takes you to that part in the report. It's miraculous.
I think, so revenue down 2% year over year. That's like hard to believe. Coffee is literally dealing drugs. How is your revenue negative year over year? That just means you're losing. No, revenue.
No,
operating margin's down too. That's right.
Yeah,
that's right.
A lot. 12.8 from 14.3.
That's hundreds of basis points down. That's not good.
It's not good. So stock,
when is
frankly, stock should be down more.
When is his honey? Well, it's not taking out the pre-Brian Nickel announcement price, which is what I wanted to get to. At least not yet. The conference call is probably underway as of 5 o'clock. How much longer is Brian Nickel's honeymoon? Does he have another year? Does he have another quarter before people start like seriously saying he doesn't know what he's doing? I think it's his third quarter.
No, but I think the China stuff is working better than it was. I think he has some time.
So do I.
I don't know how much time, but
so do I. I think if this gets into the 70s, I'll probably pull the trigger.
So I think I'm probably more likely to buy more than to bail, but I don't know, TBD. All right, so let's talk about some of the guidance.
This thing, I mean, it's almost a 3% dividend yield right now, assuming they keep the dividend. It's a $96 billion market cap. Here's the problem.
It's not cheap, I know.
29 times forward with earnings falling and revenue falling. That's the problem. This could be in the six. This could get into the 60s, dude.
Yeah, it's not
that's the. I don't think that it will, because I think there's a premium valuation here. Because if and when they figure it out, this thing can be unstoppable. We're not there, and Dunkin' is not fucking around. And in China, they have Luckin and all these other coffee chains, and McDonald's is slinging coffee, and it's another one of these like incredible brands doing the best they can in a tough situation.
Like Nike and Disney.
You think it's easy to sell American anything in China right now?
Yeah.
Or probably 20 other countries?
So you have a lot of companies pulling guidance in here. UPS, General Motors, JetBlue, Coca-Cola. Oh, they affirmed the guidance, actually. I am surprised. I was looking through these. They're not getting destroyed.
Yeah, so here's something I got very wrong recently. We did a whole show about this, how I felt the next big risk to the market would be companies pulling guidance. They're pulling guidance every day. 10 more companies are coming out and saying, we do not reaffirm what we said in January. The stock, you're right. The stocks are, in some cases, paying the price, but the overall market is absolutely not phased.
Well, you would have been right if this was a different market environment. If the VIX was at 50, they'd be getting slammed. VIX is at 23.
But then I'd be like incidentally right. I got this wrong. I thought the sell side would react to yank guidance with just blanket downgrades, and the sell side is like, Callie put it this way in our client update. This Wall Street sell side, at least as it pertains to tech, they're just frozen in their tracks. They won't do anything. Like, they will not touch estimates for semiconductors. They know they have to. Everyone knows they have to. It's like a game of chicken. Away from tech. Here, UPS pulled guidance this morning. They didn't crush the stock.
It's already crushed.
It's already crushed, and maybe everybody already expected that. General Motors pulled their guidance and delayed the conference call. You ever see some shit like that?
Delayed the conference call.
I think so.
I think Paramount did that a year or two ago. So this morning,
not JetBlue We will not reaffirm our guidance. They didn't cut it. I'm saying they pulled it. Coca-Cola affirmed guidance.
But also these like JetBlue's dead. You know what I mean?
I'm
These
just
stocks are
making
getting
the point. I thought this would be negative and lead to market-wide volatility.
Okay.
We're in the thick of the most busy earnings season of the quarter this week. Here, Tesla cut. This is via Morgan Stanley via Sam Rowe. Put that graphic back up. Tesla cut guidance. Masco, which I think makes like sheetrock, wallboard, cut guidance. Baker Hughes, which is oil field services. Bank OZK, which used to be Bank of the Ozarks. Frontier, I don't know what this other one is. It's one after another. And these stocks, if you look at them, some are down a lot, some are barely down. The S&P is up. I don't know. What do we do now?
I mean, again, the companies that are pulling guidance are lousy stocks.
Or realistic.
No, I'm just saying they've already been killed. They've already been killed. JetBlue was at $8 a couple of months ago, a couple of weeks ago. It's now at $4. You know what I mean? Like,
yeah,
we know your stock's down 50%. I don't care if you pulled guidance. We already cut you in half.
I got stopped out of this Baker Hughes. This was on the best stocks in the market list until April 2nd, and then they just demolished every oil stock.
That is a head and shoulders top. Wow. Okay.
I'm not buying back in.
So Spotify this morning, I listened to the conference call and I was listening and I'm thinking like the stock is down 8%. Remember a couple of weeks ago I said to you, like, you don't know what's priced in until you see the numbers, right? Until you see the stock react. Because Spotify, I listened to the call and great. I mean, relatively speaking, like this company's on fire. Let's go through some of these charts. Look at
well, this
next
is,
chart,
I clipped this.
Okay.
The thing that people said they didn't like, the stock was down 8% in the pre-market. I want to point out it doubled over the last year, and I think it's quadrupled off its 2022 low. This company, when they stopped spending money on podcasts, just exploded to the upside. But the guide for monthly active users was below the
barely. It was
expectation
fine.
for Q2.
It was fine. It was
689 million versus 694 million.
Okay, and then the stock basically closed flat on the day. So
how many companies have 700 million users?
Dude, they're on fire. So look at this chart on, please. So this is the top. We're looking at premium growth. It's just up and to the right. You're looking at premium revenue. Underneath, you're looking at ad reported growth, ad reported revenue. Next chart, please. This is the coup de grace.
Great.
Look at their margins exploding. If you look at their free cash flow, same thing. Like the company is firing on every cylinder. And this is the reaction intraday. So this stock, it sold off probably, Josh, to your point. It had just been a rocket ship and whatever. People took profits and then they got right back in.
Unfortunately, I think it gets back to the gap and top of that gap and rolls back over. And maybe. It's not anything that they're doing wrong. Put that chart before this up. So this explosion in margins is really key. In 21, which is where this data series starts, they're basically doing this $2 billion influencer spend. They give Joe Rogan money, big money, which probably is paid off for them. They give Bill Simmons money, which I'm sure there's paid off in spades since then. They try to buy Joe Budden. They try to buy a whole bunch of properties. Then they start throwing money at celebrities who've never podcasted. Chart off. They give money to like the royals. What's his name? Prince
Harry.
The one that nobody likes, the redheaded one, Harry.
And then the Kardashians.
They give money to the Kardashians. They give money to Harry and what's the girl?
Meghan.
The princess, Meghan. Here, you're rich, you're famous. Here's a podcast. Kardashians. Yeah, you'll probably be great at broadcasting. I bet Kim can't wait to sit in a studio. One? The Obamas got a podcast. So I get it. They looked at it like it's a land grab. Let's just wrap everybody up.
That was hanging over the stock. The stock was in shit because of that.
That's my point. So they retrenched. They said, all right, this is stupid. We got The Ringer. We got Rogan. We got a couple of the biggest property. Did they call her daddy? And I think for 3 years and then that contract. Whatever. They got the ones they wanted to get. They invested in the podcast space. They pulled back that investment substantially. Between that and music revenues,
they're killing
it. I agree. I agree. And I don't know that this thing needs to go much lower. I just don't think it'll get back into an uptrend. It's not Netflix. A lot of people got long Spotify after Netflix reported.
Wait, dude, what do you mean back up in an uptrend? Look at the stock. It's absolutely in an uptrend.
I'm talking about shorter term. I think it's going to struggle with the pre-earnings until they come out next quarter and beat expectations.
Yeah, would be fair. Listen, would be fair. Stocks doubled and tripled, so that would be totally normal. All right, let's talk about the biggest question on Wall Street today. What? The stock market. What is happening? So you're telling me that the market is unchanged, in fact, better since the Wednesday afternoon announcement. The Nasdaq is now higher than it was pre-Liberation Day, and the S&P is right where it closed. Why? We'll get into that in a sec. Chart on, please. Look at this monthly candle. I mean, this is like super duper abnormal. This is funky shit, Josh. The Nasdaq was down 11% at the lows of the month, just for the month. It was down 11% for the month in April, and it's now up 1.5%.
Do you see where it found support?
Ooh, I do.
You're going to tell me you don't believe in God? Look at that. Look at where that found support.
There are no atheists with the stock market
right
chart.
At the 2020, right at the 2021 peak, at the end of 2021, the Qs hit 400, and then sold off to like 280, and had just a brutal bear market. We literally, that candle bottoms this month right at those old late 2021 highs and refuses to get below.
So Josh,
is that a 9% rally off that low?
More.
It's more. It's 11, 12.
We were down 11, so we're up even more than that. So I am one of these people. I don't think the stock market is stupid. In fact, I think it's the opposite. But I am having trouble making sense of why the market is higher today than where it was before the announcement.
Because Trump capitulated. Because it's already over. That's the answer.
Okay, fine. But counterpoint, it hasn't even begun.
No. The recession hasn't even begun, and we might have one. The trade war has already been lost.
Okay, why are stocks higher, dude? You don't have to have an answer.
They're laughing because now it's a joke. Because now remember, you said this, not me. I said this first during COVID. You said this here on YouTube 2 weeks ago, and it was perfect.
What did I say?
You said the headlines are shocking, but their ability to shock us will dissipate the longer this goes on for.
You said that. That's your line.
Well,
a good line.
You probably didn't say dissipate, but it's like, yeah, the news will keep being crazy, but our response to it will go from, oh my God, run, to, oh, that's so annoying, to LOL. Here's Lutnick today. We have a deal in place with a country, but I can't reveal who it is yet. It's a fucking joke already.
Is it Micronesia?
It became a joke.
But my point is, dude,
allegedly it's India. But no, this is my point. We haven't had the recessionary thing that may or may not be coming yet. We don't have empty shelves. We don't have skyrocketing CPI reports. All of that could be in the future or may not be. It's Schrodinger's cat. What we have is a joke.
Investing is a confidence game. And you're telling me that the multiple that investors are willing to pay for stocks today, being the same that they were willing to pay 30 days ago before the announcement, is the same, doesn't make sense objectively. It does not make sense.
You're not listening to me. It's over. They capitulated. They're talking today about a carve out for the auto manufacturers.
We're talking past each other.
What's left?
I'm asking why investors are as confident in the multiple.
I just explained it.
No, you didn't. You said LOL. LOL is not an explanation.
No, LOL. The trade war is over. We lost. There's a carve out for Apple. There's a carve out for computers. There's a carve out for semiconductors. Today, they said they're working on a carve out for automobiles. It's over. What are the tariffs on? Denim? Like jean jackets? What literally are the tariffs on? If we're carving out cars, it's game over.
Okay,
That's
fine.
Why the market's higher.
Let me say that tariffs are over and there are no tariffs, which is not true.
No, there are tariffs, but if tariffs exempting tariffs is what we have.
Fine.
You see?
Getting back to topic number one with Mr. Dalio.
Doesn't answer your question?
With Ray Dalio talking about the floor moving beneath our feet. Why are investors willing to pay the same price for stocks as they were 30 days ago? I don't know. It feels curious to me.
30 days ago.
Apparently, nothing surprises you. So
No. I didn't foresee this outcome. I understand it. 30 days ago, the worst case scenario was somewhere out in front of us on the horizon. We had no idea. Now we know exactly what the worst case scenario is, and they're already pulling back from it. So now there's the uncertainty of how bad will it be is in the rear view. Now what's in front of us is just peeling it back, making it a little bit less bad, and then it's gone. It's over.
Okay.
We lost. Newsflash. No, nobody won, but we definitely didn't win.
Okay. The S&P 500.
You don't like that explanation, or you don't like that I came up with it?
I mean, you're allowed to just be like, yeah, this feels weird. You don't need to make up an answer. Go ahead. Fine, one more time.
The market hates uncertainty. There's less uncertainty today than there was in March.
Is there?
Gabish?
Really? No, no fucking gabish. There is less uncertainty today than there was before Liberation Day.
Liberation
what
Day
planet
was
are you on?
Liberation Day was still in front of us in March. Now it's like, oh my God! Remember he said 180% tariffs on China. Remember that?
Let's move on.
It's become, listen to me, it's become something that now we can get our arms around. That's as bad as it could be. Now, what's the reality? Probably not going to be that bad. It's recertainty. The market loves recertainty, Michael.
Okay. The S&P 500.
The chat is with me, bro, except for a few people who are with you. Hold on. Can I just tell you what's going on in the chat? Josh is wrong. Okay, let's get that out of the way. Josh is about to punch his monitor. No, Michael is my brother. We disagree professionally. This is what we do, guys. There's a couple others. You're getting some props here, okay? So just bear with me.
This is all part of the show. Let's
supply shocks coming. No, they're here.
Okay,
they're here.
Josh, please attention. All right. So Ryan Dietrich tweeted. The S&P 500, and he's done great work all week on this. The S&P 500 is up 6 days in a row and up more than 7% over that time. It's only happened 8 other times.
It's crazy.
Higher 6 months later, 7 out of 8 times. Never lower a year later. So this type of stuff does not ordinarily happen in a bear market rally. This is the type of stuff that sets up a new bull market, which sounds hard to believe, but that's what it says historically. So we spoke last week all about the breadth thrust. That was like the topic du jour. Sentiment Trader says this is a super zwag, a super breadth thrust. So what does he mean?
A super zwag.
A super duper zwag.
Has that been used before?
What this is measuring is, and why I love this sort of metric, it's because it's capturing the psychology of the market, which is permanent. The psychology of the market, it's a psychology mob. It's same as in 1700 as it is today. People behave like people. Okay, so what is a super breadth thrust? What it is measuring is what happens when you go from extremely oversold to extremely overbought in a matter of days. That's what it's capturing. Chart on, please. So as you can see from Sentiment Trader, the green diamonds, this happens at market bottom. So specifically, we're looking at the New York Stock Exchange up issues. It's the 10-day exponential moving average of them going from under 35% to over 64% within 30 days. So again, extremely oversold, everybody out to everybody back in. And a year later, it's higher 100% of the time. Now,
I never would have predicted this.
This is going to happen?
This is like to this degree, like a super zwag bread thrust inside of the same month.
It's wild.
As the trade war starts it's
wild.
Is now, absolutely wild.
So Josh, I was talking with Ben about this today on the show. We use a lot of Ryan's other data. This is the hill that I will die on. You can't panic sell. Because what happens if you sold 2 weeks ago? Now, this didn't have to be the outcome, but here we are. If you sold 3 weeks ago, literally, what do you do now?
What happens is you do a lot of podcast appearances and you tell everyone, I'm right, the market's wrong.
I'm not talking about pundits. I'm talking about real people. Like, seriously. All right.
Yeah,
now,
real people have to real people, if you went to cash your whole portfolio, you probably never invest again after this. Like, think about what that does to you.
It's awful.
It just makes you think the whole thing is rigged against you.
It's rigged. It's a joke. It's a game. All right. So now here's real talk about the market being at the same level today as it was prior to the announcement. It's not. I'm talking about the index. There's components that make up the index. So if you look under the hood, not everything is at the same level. There's winners and there's losers. So let's look at the best and worst industries since Liberation Day. Energy equipment demolished. Air freight and logistics.
Oh, this is good. This is good. Wait, hold on one sec. So on the left, these are like the industry groups that have had the biggest comeback since that announcement, or went down the least.
Just 4-2, like the close
Okay.
of 4-2, open of 4-3.
Give me like the top 5 sectors for each.
Top
best
5
and worst.
sectors are construction and engineering,
Okay.
entertainment, tobacco, software, and food and drugs.
And then gas and utilities is in there. It's a little bit defensive. It's got a defensive bend to it.
All right, but
not
more
all of it.
importantly, let's look at market cap, okay? Let's go to the next chart. So, just because the index is where it was doesn't mean every stock is. Apple, down $190 billion. Amazon, $87 billion. United Health, down $104 billion. Facebook, down $78 billion. A lot of stocks are getting destroyed. On the flip side, Broadcom, up $93 billion. Microsoft up $90 billion. Netflix up $77 billion. So there is a lot of things happening inside the market that might make the...
Wait, let's do more of these, because hold on. If I blindfolded you and said like what 10 blue chip stocks have had the biggest market cap swings positively since Liberation Day, there's no way you're guessing Walmart, but it's on there.
Yeah.
Plus 47 billion.
Yeah.
Like there's no way you're saying Microsoft.
No.
Well, if I said most market cap in dollars, you might have, but like Walmart.
But it's so
gained
interesting
market
because you've
cap.
got Microsoft and Netflix in the left column, biggest winners, and Amazon and Apple and Meta, biggest losers. So the market is making sense of all of this. The market is saying, okay, loser. Okay,
That's such a
winner.
great point. And you know who could shut the fuck up forever? The indexes, the ETFs are distorting the market. Oh, really? Can I show you record-breaking dispersion between the top 10 market caps? Apple, put that back up. Show me how ETFs are manipulating the market, you dumbass. Look at Apple. It's down $200 billion in market cap. Microsoft added 90. That's the number 1 and 2 market cap companies in the world. Explain to me how ETFs are manipulating the market. Those people should feel free to never speak again. What do you think about that? Is that a fair conclusion?
No, it's a little bit. I mean, I think that
What
ETFs,
do they have to say?
I think that it's a more nuanced argument than that. But yes, for the purposes of this, I think that markets are
There's
functional.
no nuance in that chart. You have gigantic market cap companies completely diverging in direction. Where's the nuance in Amazon and Walmart diverging to that degree? It's the same. They sell the same product.
Okay.
Seriously, like it's wild, and I think that's like a feather in the hat, in the cap of like real stock pickers. Like if you understood that Apple was way more susceptible to trade with China than Microsoft, that was a really good trade to have made, and you got paid for making it. You got alpha if you got that right.
I want to talk about a chart from Torsten Slok, which shows the sharpest decline in earnings outlook since 2020. So if you want to tell me that LOL, the tariffs are behind us and it's a joke and the market should be where it is today, I mean, what would you say for this?
It's
a bit curious.
I would say it's completely unexpected, but remember, as quickly as they take earnings expectations down, they can add them right back. And Michael, if they sign this exemption on autos, like it just shows you, and I think they're going to, if they sign a trade deal with Japan or India, or there's some breakthrough with China or something, if they do that, no one's going to price in these revisions anymore. They're going to blow right through them. And I think that's what we're experiencing over the last week. There's no better explanation than recertainty.
Well, the market is looking right past all this, so it better be right.
That's what I'm trying to say.
It better be right. All right, let's move on to some audio clips. We're going to talk about Amazon. So this happened this morning.
Amazon will soon display a little number next to the price of each product that shows how much the Trump tariffs are adding to the cost of each product. So isn't that a perfect crystal clear demonstration that it's the American consumer and not China who is going to have to pay for these policies?
I will take this since I just got off the phone with the president about Amazon's announcement. This is a hostile and political act by Amazon. Why didn't Amazon do this when the Biden administration hiked inflation to the highest level in 40 years? And I would also add that.
Well, I mean, she's a paid liar. She's also 27 years old, and they tell her what to say, and she just says it for a living.
This really bothered me, and it's pretty frightening.
It really bothered Trump, too.
All right, you know what? Before we get to that, let's just play the next clip from Alex Kantrowitz.
Just to be super clear, the team that runs our ultra low cost Amazon Haul store considered the idea of listing import charges on certain products. This was never approved, and it's not going to happen.
So this isn't happening at all?
No, the information's incorrect.
Okay.
All right, enough of that.
So I'm just gonna make sure.
Is that boy one of Jeff Bezos's clone army? All right. So they sent him out to reassure Alex Kantrowitz. What's going on here?
No, it was a miscommunication. They're not doing this.
I understand, and I think they were thinking about doing it very seriously, and the only reason why is because Amazon Haul specifically competes with Shein and Temu, and they're both doing it. Like, Amazon Haul is not competing with Walmart. It's competing for this, like, really, like, cheap shit China import business, I guess, for like teens and people in their 20s.
My point is the White House making
I think they were going to do it,
enemy-
is my point. I
the
think
White
they were
House
gonna do it.
attacking and making an enemy of one of our companies, calling that a hostile political act. I just don't want to live in that world. I don't like it at all. I hate it.
Well, I guarantee it's so much worse than whatever you just saw in front of the curtain. And I'm going to tell you right now, I think it was being considered. And I think Jeff's not the CEO of Amazon. And he's definitely not sitting in a room making decisions at that level about what you're going to display on the price page. So if that even got to Jassy, I'd be surprised.
And then, well, Lutnick was talking with Sullivan today about the hike, and he said, "Well, it's not. It's such a fucking joke."
Yeah, Lutnick is also paid to say whatever he has to say. I don't know if that got to Andy Jassy. I highly doubt Jeff Bezos was consulted on it. I think if that idea were brought to Jeff Bezos, he's smart enough to know immediately, no way are we doing that. In no way does that help us. It's not like it's going to lead to more sales. It's not like there's any kind of win that we get from the customer for showing them why they're getting screwed, even if it's not our fault. We're not doing it. All we're going to do is create a really powerful enemy. And sure enough, they spoke by phone. Bezos, not even the CEO. He gets a call from Trump. He's like, I never heard of that. We're not doing it. It's fake. And then Trump actually said, great conversation with Jeff Bezos. It's not happening. Now we know where the red line is for the Trump administration. U.S. corporations cannot tell the consumer this is why this costs as much as it does. That's really interesting to me. Now we know where the most sensitive, that's the Achilles heel, is if companies start telling their customers the truth, which of course
Lutnick said to Sully, he's like, it's 10%. What? They can't handle a 10% increase? Give it 10%.
It could be anything. How do you know it's tariffs?
What a joke. Companies can't raise prices because their goods are costing 10% more. It's 10%.
You know how stupid they think we all are? Do you know how that was my takeaway. They, not me and you, like all of us, they must think we're so stupid that you could say these tariffs are great and they're going to help the economy and tariff is the most beautiful word in the dictionary. Just don't show them on the price page. Oh, okay, that makes sense. That's how stupid they think we are. Again,
don't raise your prices.
But again,
Buy America.
No. Raise your prices. Don't blame us. That's the message to corporate America. I actually think they're happy that happened today because it gave them a chance to really explain to the Fortune 500. I'll tell you what you can't do. No one's going to do it. You'd have to be suicidal to do it now. Like, there was a thing that Ford was doing. Ford went hard the other way. They were not going to add tariff to the sticker price. Instead, they said, we're going to give everyone employee pricing. Like, we're going to eat this for as long as we have to try to pick up some market share. So no one's going to do that now. And now we know where the red line is. You can say there's uncertainty. You go on a conference call and remove your guidance. You could tell sell-side analysts that you're not reaffirming. What you can't do is tell your customers how much of an increase in cost is directly related to what the White House is doing. Don't you dare. And that, to me, that was like the big takeaway. I thought that was great. I loved it. All right, what do we have left? It's we're
just
bumping into
real
that
quick.
time.
2 charts on Amazon since we're talking about them. Did you know that Amazon and the S&P are neck and neck since 2018? It's kind of wild. 7 years of no outperformance.
I didn't know that. Couple things on Amazon. We have Amazon versus Walmart chart too.
We spoke about this last week briefly. Just
Yeah.
the PEs crisscrossing. It's just notable.
All right, I was going to do this whole thing today, which we don't have time for, about Amazon today launched 27 satellites. They're going to have 1,800 satellites ringing the globe. They're launching their own competing internet service to Starlink. And I think it's going to work. And I think it's going to be a pretty good growth engine. Not anytime soon. The CapEx will far outweigh any profitability, probably for 5 years, 10 years. But Amazon being able to offer its own web service all over the globe and Starlink not being the only game in town, I think is kind of important. I think it's good for the planet, and I think it's really interesting. But we're not going to do that today. I would also say Prime Day. There's a whole bunch of sellers saying, forget it, we don't want to participate. And I didn't realize this. Did you know, Michael, 62% of everything sold on Amazon in the fourth quarter of 2024 was from a third-party seller?
I thought
Is
it
that
was
what you-
63%. No, I didn't know that.
Would you have guessed it's like 2/3 of their business is third-party sellers?
I don't know what I would have guessed. That's high.
It's high. Not Amazon selling other people's stuff, but like other people selling their own stuff.
Yeah.
That's a bigger part of the business, I thought. Prime Day hits merchants, but they do it because it's good for revenue. It's not as good for profits. The average Amazon seller keeps 15 to 20% of a sale as profit after paying all the Amazon fees, etc. Amazon takes a 15% commission on every unit sold on Prime Day. And sellers
Lower than
pay
Apple.
Amazon $1,000 to highlight a discount. You know where it says best deal on a product? That costs seller $1,000. So anyway, U.S. shoppers spent $14.2 billion during Prime Day last year. I think it's the biggest shopping day outside of Black Friday or Black Monday or whatever it is. That's a really important day for Amazon, and they have a lot of third-party sellers who are just like, not this year. We can't get our stuff at the cost that we normally get it. We're just not doing it. So that'll be interesting. I'm sure people will ask them about that when they report on, is it Thursday afternoon? Mm-hmm. Okay. All right. Let's go.
All right, we'll end with this.
Let's go to make the case. Or do you have something else?
We'll end with this real quick.
All right.
So I typed into the Quartr chat bot today, what were the most important things said on calls today about the state of the consumer? And it pulled quotes from Coca-Cola and Starbucks and Visa and everything that happened today. And again, they're tagged so that if I scroll over one of them, the quote pops up and I can be taken to that part of the conference call. Okay. I bring this up because Adam Parker did a similar exercise at Trivariate Research where he typed into ChatGPT, assuming NVIDIA grows revenue 50% in 2025, 25% in 26, et cetera, going above and beyond, what will NVIDIA earn in 2030? And he shows below is the unedited response. So Adam goes through this whole thing about the type of work that these models can do, and here's how he concluded. He said ChatGPT 3 costs $20 per month. In minutes, it can do what it currently takes highly paid analysts days and weeks to accomplish. If you are already regularly doing this kind of work, sorry for showing you the obvious, and if you aren't, it is definitely worth tinkering with because firms and research departments with dozens of fundamental analysts may keep some, may shift some to other areas, or may only hire going forward those with differentiated skills that can't be easily replicated by models. Obviously, we could have asked different and varying questions, better questions, and iterative questions. We could have asked what the forecast for revenue growth over the next 5 years would be, given its analysis of demand and competition. But if part of the analyst's job is to understand what introduces volatility into the P&L of companies, these models are already quite good for many applications.
Well, good luck finding a DJ who can move
and shake,
and shake like this. John Lovitz.
Good retort.
I'm meeting tons of kids who are like, I want to be I want to be an analyst. Dude, you need to have your head examined.
No.
The hiring class is probably going to shrink by 90% the next 5 years.
Yep.
Because what do you do when you get out of college? What's your first job as an analyst? It's bitch work.
Yeah.
Nobody needs to pay you health insurance to do bitch work because ChatGPT is the greatest bitch of all time.
Yeah.
So that is not smart. Do not pay $400,000 in tuition to become an analyst for Wall Street. Please don't do that.
So I am making the case. There's a play on words here, Josh. It's IMAX and chill. So what am I talking about here? I want to talk about this idea, and I'm certainly not predicting by any stretch of the imagination a bear market rally that looks like the dot-com bubble. My point is, chart on please. My point is that you can't get too hot or too cold in market downturns. There was 10 market rallies of 5% during the dot-com bubble. They all fizzled. They are all psychologically very damaging. And this is also a plug for exhibitaforadvice.com. If you are an advisor, you can have this chart. This is our chart of the week for this week. All right. Any comments on here, Josh, before I go to IMAX?
Biff Griebel is saying your firm's colors. Oops. No, you don't understand. That's our company, dude. He thinks you screwed up and stole a chart from someone else.
No, it's the opposite. Okay.
I lived through these, and I will tell you, after every one of those, it just felt worse and worse and worse. And here's what ends up happening: then you get a 5% rally, and everybody goes, "No way."
Yeah, it's a boy who cried wolf.
Sell them, and then that's the one.
Yeah.
And that's the one. But that's not a V shape. That's a real bear market, and we haven't experienced one of those in a very long time. Like, honestly, we haven't had one.
Yeah.
And I hope it's not. Maybe it's this year. Maybe it's not. I hope it's not. But also have no control. Let me do a mystery chart, and we'll get out of here.
No, sir. I'm making the
you have
case for
more?
IMAX. Give me a second.
Oh, okay.
Give me a second.
That was quite a wind-up, Michael.
Thank you. I made the case for IMAX back in September, and I'm reiterating my buy. I bought more shares. I still hold it. All right. Chart on, please. Let's go through this quickly. There's a 5-year
working.
look.
It's defensive. Is it like defensive?
Yeah, I don't know about that. Here's all you need to know. Here's all you need to know, Josh. This is taking market share. Going to the movie is an event now. People don't just get out of bed and go to see whatever movie's out there. The Accountant 2. And if they do, they're going to see it on the big screen. Next chart, please. So the top 10 grossing IMAX titles for the market share of domestic opening weekend, it's double digits. Now, IMAX has less than 1% of all screens. You saw this with Dune, Part 2, and you're seeing it with Sinners. IMAX has less than 1% of all screens. I think 20% of all views for Sinners was done at the IMAX. They are winning, and it has flown through to the bottom line. Next chart, please. Operating cash flow. So I like the story. I like the stock. I'm in. I believe in it.
I think it's going to work. It's also small enough that somebody should acquire it. Like
it's
yesterday.
$1 billion. It's tiny.
It's been an acquisition target allegedly for 20 years. When I started buying this stock, roughly at the same price it is today. It's two different types of IMAX. There's the real IMAX theater, which is 7 stories tall and gigantic. But then the better business is converting existing theaters like AMC or Regal if they have let's say they have an Octoplex, they have 8 screens, they'll take one of them and make it an IMAX conversion. It's not quite as jaw-dropping of a viewer experience, but it's good enough that, to Michael's point, when you're going to see Sinners, that's the experience that you want. It's nearby. It's an elevated ticket price. IMAX takes a piece of it. Everybody's happy. The other thing you're going to hear this year is huge battles over who gets IMAX screens for their big movies. You have Fantastic Four coming in a month. You have new Avengers coming a year later.
And the studios are promoting IMAX.
Yeah,
it's a big part of the story.
You have Superman coming, which is
Jurassic,
which is a complete revamp of the DC cinematic universe, and you have Tom Cruise coming back. All of them are vying for whatever IMAX screens they can get their hands on, and that gives IMAX like a lot of clout and power in the industry, which should translate to greater market share. So I like the story. I should probably join you in that stock. Maybe I'll wait till it doubles and then I'll buy it. All right,
make a case. I'm sorry, mystery chart. Go ahead.
Mystery chart. This one's not going to be that tough. These are 2 companies that basically do the same thing, but their stock prices look very different. What'd you say?
Coke and Pepsi.
Buy this man a Coke. I have not gotten to the bottom of why. Show me the next chart. I just want to point out Coca-Cola beat earnings today, reaffirmed guidance for the year. This has been one of like the easiest, lowest stress stocks to be in year to date. It just looks great. It acts great. Yeah. You can see it drop below its 200-day for a cup of coffee. The buyers came in immediately and bought it. And today is not just a 52-week high. It's an all-time record high. Give me that last chart. Michael, this is like, you talk about American exceptionalism. What's more exceptional than a chart like this? For
Nothing.
Effectively sugar water in a can.
Nothing. It's beautiful.
I know they sell water and they probably sell like 50 versions of soda, but like in the end, that's American exceptionalism, turning something that basic into a brand that enduring, and new all-time record high today. And of course, largest shareholder, the GOAT, Mr. Warren Buffett. All right, that's it from us today. Guys, I want to thank you so much for listening, for watching this extended edition of What Are Your Thoughts? Michael, you crushed it today with the charts. Sean, Chart Kid, Matt, Callie, everybody, thank you so much. John, Duncan, we appreciate you. I want to remind people tomorrow's Wednesday, which means an all-new edition of Animal Spirits with Michael and Ben. There's a new Ask the Compound with Ben live on Thursday. And then on Friday, we'll be recording something really special for you guys, which you will get over the weekend, an all-new Compound and Friends. Keep it locked. We'll talk to you soon.